Hi everyone! Today I'm going to share with you one of the most commonly used inventory methods, and this is the FIFO. So what is FIFO? FIFO means first in, first out. The rationale here is that whenever you buy goods, the first goods that you bought is also the first goods that you have to sell to your customers, especially if the goods that you're holding is has a expiration date. So just to show you how it works, for example, you buy item A and you put there in the reference a stock in. The reference is batch A, or we can put their invoice number, whatever, as long as there's a reference and you do not get confused. So assuming you buy 10 items and the cost is, for example, in currency is $5, so that you get the total cost as $50. And then come the following day, you sold 7 items from the 10. So you sold 7. Of course, you're going to put there the cost, and the cost of the 7 items is 35. So let's put here. The currency also is in dollars. So the balance would be, coming from batch A, would be 3 here, less 7. So 3 here, and getting the cost, just copy the cost, and then compute for the remaining balance. All right, the cost of the remaining balance. Now again, you have to buy another item, the same item, so you have to put here stock in again. You can put here the dates. Okay, so for example, you buy this January 1st and then you sold it January 2, and then because you see that the items that you are selling is quite movable, you buy another item January 3, and you buy another quantity. Say you bought 15, but when you put here, of course, the reference. This time the reference would be batch 8 for purposes of this discussion, for you to see how the first in, first out works. So you bought 15 items, but this time the cost is 5.5. All right, 5.5. So you get again the cost of this one. All right, there has been an increase in cost, maybe because the supplier saw that the item he or she selling is quite in demand. Now, you being a good marketer, you are also again able to sell them. So say in January 4, there is a sale coming again from a return customers. They see how effective your product, the products that you were selling, and the items. Let's put first the okay. Here's the outstanding balance of your items. All right, so in here you have sold, say you have sold 10 this time. You have to sell 10. All right, 10 items. So for when we say FIFO, you have to finish first the first batch. All right, so you have here 3, and then since you sold 10, you get the remaining balance of 10 from the second batch that you recently bought. So you put here 7. So there you have to copy whatever the cost coming from batch A, and then copy whatever cost from batch B. So that's how it works. You get to identify how much is the cost of that items when you put that in your books. So here you'll note that the total cost that you have to record in your books would be, as a cost of sales, would be $53.50. Now let me share that with you if you're holding a Quickbooks. All right, so it would be very tedious if you do that manually. So right now we're seeking the assistance of Quickbooks. And here, when you have your Quickbooks, this is Quickbooks Desktop, you have to go to Preferences, okay, and then look for Items and Inventory. Click Company Preferences. Here, it's indicated in here. Sometimes the items are not selected, so we have to select this. If you can see the advanced inventory settings, it's good because you can make selections and updates on how you have to update the settings, the inventory settings of your QuickBooks desktop. So you click on FIFO, you click on use FIFO starting on. For example, the date is, you can say or put there, because you started your business January 1st, you can put it there, and then just click OK. So if you make any your setting items, that's how it will work in, and then click OK here. Okay, because if you don't click OK and just click cancel, as if nothing happened. So you have to click OK, and it shows there that whatever changes you make, it will be reflected. So in my next video, I'll show you how it works. All right.